LiteFinance, the world of financial freedom.
Hello, it's Monday, October 24th. It's time to start the market forecast. So this week promises to be very interesting due to how important the data publications, mainly in the second part of the week. So after the calendar, we will dive into deeper analysis of dollar fundamentals and try to assess what we could plan for trading in pairs with the US dollar. So first, as always, we begin with macro data, and today, on Monday, we will get the preliminary PMIs from Japan, UK, Eurozone and US. On Tuesday, we will get conference board consumer confidence, so we can say that those days will be like an appetizer before the main dish. And so next is Wednesday with interest rate decision from a Bank of Canada, where consensus says that the rates are going to be adjusted upward by 75 basis points, which is a pretty heavy increase. But keep in mind that right after the BOC, we have crude oil inventories. So naturally, on Wednesday, we could focus on trading CAD pairs, but there is too much counter risk in EuroCAD and USD CAD because of their fundamental factors and data publications. So it might be a better idea to go for CAD JPY this time. Yen looks very weak, and if the crude oil data will also turn out positive, it might be a good idea to go long still despite recent strengthening. Okay, next is Thursday, and first we will get the ECB rate decision, where again we will most likely see an increase by 75 basis points, and after that we will get preliminary US GDP for third quarter. So it can be a very volatile day. So finally we have a Friday and Tokyo agglomeration CPI data, a Bank of Japan rate decision, which most likely will stay the same, and after that US PCE inflation. So we will have emotions till the end of the week. Okay, now investors are surprised by two things now. Why does the core inflation in the US continues rising despite the Fed's aggressive monetary tightening? And why is the economy that strong? So according to the consensus forecast of Bloomberg experts, US GDP will expand by 2% in the third quarter, and the model by the Fed of Atlanta signals about 3%. So it is assumed that the acceleration of economic growth will be based on foreign trade, which is improving for the fifth month in a row. And so despite that, I think that no one should expect the Fed plans to be changed by a recession. It must be very deep for central bank to return to QE or start cutting rates. And so given the current resilience of the US economy, a major downturn seems unlikely. A soft landing is a very good scenario for the dollar, and therefore the Euro-USD downtrend remains strong. Of course, anything can happen in the short term. Bank of Japan FX interventions, weekly rally in the S&P 500, and expectations of a 75 basis point ECB deposit rate hike at its October meeting due to record inflation in the euro area could push the euro higher. But these are all temporary factors. And so, as for the USD JPY, the BOG FX interventions failed in September, and the yen should soon weaken again this time. So in terms of Euro-USD, we should notice that even the ECB hawks do not see the interest rate above 3%. So it is still relevant to sell the Euro-USD on the rises. So if the price doesn't consolidate at 0.9845, we could enter shorts again. And so that will be all for this video. Thank you guys for watching, and I'll see you in the next one. Take care, bye bye.